What's going on, everyone? Hopefully you enjoyed your weekend, but even if you didn't, that is okay, because we have a lot of exciting things going on in the stock market this week and a lot of action all around. This May was the single best month of May for the stock market in the last 35 years, and we have a lot of great data to showcase in today's episode, showing what the market normally does next in situations like we're in now. And Palantir stock is skyrocketing, and you're not even going to believe what they are doing with the US government right now. Plus, with the cherry on top, we have a little bit of a hidden Powell speech tomorrow too, which is always nice to see. But Tom, we're in for a great week, so let's get right to it.
Yeah, the SPY was very choppy on Friday. We can see it actually had a really good hit off of this 590 resistance and then drop off there early in the morning. But as the afternoon started to come around, the SPY made a full-blown recovery and closed right around that 590 resistance. So this is definitely going to be a wild start to this week. I cannot believe that that was the best May for the stock market in 35 years. That was crazy to hear, at least for the S&P 500 anyways. And, you know, whenever I start to look back here, I'm like, wow, you know, we go all the way back to like 1991, 1990, where we saw that 9.2% pop. And I just would have thought that there would have been some other Mays like that. But, you know, going back, this recovery has been awesome. We go to the daily chart and we just look at the overall recovery from the beginning of April here, and it's been pretty straight up. I am a little bit worried, Mike, that we might start to see a bit of downtrend come in, and we'll definitely talk about that in a little while. But I know that right now we're in this post-election year, and we keep looking at historical data, and I think that whenever we start to look at how the markets move this year, it's pretty spot on with the historical data for how it usually does move on post-election years. And I mean, even to the point of like April being the exact bottom there.
2025 has been such a wild year, and we're only halfway through it. It's crazy to think that just 2 months ago, the stock market was heading into Liberation Day and started tanking, and now, you know, obviously we're looking much better. But of course, either way, I think it is very interesting with how closely this year has been tracking the historical post-election pattern. And if history continues to be a guide, there definitely are a lot of exciting opportunities as the year progresses. But I do want to mention that, like, the stock market is up a ton in the short term, and I think it's very interesting that if we look at this data here, in the past, whenever the stock market has rose by 18% or more over 35 trading days, we could see that the future returns can get a little bit shaky in the short term.
They definitely can. Like, whenever I look at the 1 week later column here, it's actually only green 43% of the time. So it's actually red higher percent of the time than it's green, obviously, like 57% of the time being in the red. And the average percent move being negative 0.57% is definitely pretty brutal. Whenever we get to like 2 weeks later, there is some red mixed in there, but at least the average move is a lot more skewed towards the green side. I guess the further out you go, the more bullish things become. But in the ultra short term, that is a big worry for me, Mike, and it's something that I'm definitely going to be thinking about whenever we look at the overall market for this week. I know that in the short term, the SPY has been pretty shaky up here at the top. You know, it's posted this recent high up around 595 to 596, and we've really seen a failure to break out past that. Even at the end of last week, you know, we saw a push towards that high and another rejection right there on Friday. So we're going to have like a really good, like, true breakout of that recent high on the SPY, in my opinion, and we could end up getting it. But I think that we really need to see like some good news, and I do think that some trade deals and maybe some talks with China might get some things stirred up.
And trust me, we might have some of that this week, but, you know, I think in the most direct sense, what the data is showing us right now is that there are a lot of good signs pointing to positive returns throughout the rest of the year, but there's also a good chance that we will see a natural, healthy, and expected pullback, because you can't have the stock market go up, you could say, nearly 20% over the past 35 trading days and not have some sort of cool down. Like, whenever you look at giant increases throughout history, similar to what we have now, like, it's just normal and expected and actually healthy to see pullbacks.
100%. And I would even say that just healthy in general, no matter whether you're looking at, like, let's say data supporting the overall market, or whether you're just somebody looking at the natural way in which stocks move and just stock charts in general, you can just tell that at some point stocks get a little bit overextended and pullbacks are natural. And even if we go back to the SPY a little bit, and like we go back and we pinpoint some of these other periods where SPY has been in a clear uptrend, there are still points where we get these pullbacks. Like right here at the end of 2024 in October, there was a multi-week pullback, but we could still tell that for the most part, SPY was still in a huge overall uptrend. And I'm not saying that like we need to necessarily be super scared that we're going to be dropping off and falling all the way back down to 500 or anything like that. But I do think that like a little short-term pullback could be in the cards. And one thing that I'm really looking at with SPY over the next few trading days and even the next few weeks is this overall gap fill. I know a lot of traders have been watching this down to around 565 to 570, and that's definitely going to be something that I watch for as the SPY dips, and especially as it gets back towards its recent low here around 575, that'll be pretty huge too. But I know everybody's been waiting for that gap to start to fill.
Definitely, and this week should have a lot of big movement too, because if we look at the economic schedule, there's basically an important event for just about every single day of the week, and we'll start with Monday, where we of course have the ISM data 30 minutes after open, but we actually have like a little bit of a hidden Powell speech sprinkled in as well. So basically, he's set to speak at 1 p.m. Eastern time on Monday. It's not even on like the official calendar, but if you go to the Federal Reserve site, that's where you see it, and he's giving the opening remarks at the Federal Reserve Board's International Finance Division. So keep that in mind. Again, this is going to happen at 1 p.m. Eastern time. Whenever Jerome Powell speaks, he definitely moves markets. He's the most influential person in the stock market, besides maybe Trump, especially right now. But then also going throughout the rest of the week, we also have a really big jobs report on Friday, where this is going to give us a good idea as to how the economy is holding up with all of the trade war and general economic craziness we have going on right now. And just sprinkled all throughout the week, we have a handful of, ISM data releases and just important events in general. So definitely keep that in mind. And then also, while it has not been scheduled yet, supposedly Trump and the Chinese president Xi Jinping are expected to hold a phone call this week. Nothing has been specifically scheduled, but as we know, we are in a news trade war driven market, and any updates on this front will certainly be very important.
Yeah, definitely. And I think that's something to keep on the radar still. And maybe not even just specifically with China, but just other countries in general. We're probably going to see a lot of trade war updates coming over the next few weeks. And I think that could definitely be something that moves the market a lot more. Hopefully the talks go good and they're not negative, right? If there is some negativity there, then we could end up seeing stocks pull back a little bit. Like, let's say that, the trade talks aren't going anywhere, and then Trump might need to flex his muscles a little bit with some raises of some tariffs, then that could be something to keep on the radar. And I know over the weekend, Trump actually talked about raising tariffs on steel as well. And that's something that could definitely be another factor coming up this week, is that Trump could come out and talk about these things at just about any time. So just keep that on the radar. And it's something to just be a little bit wary of. And hopefully we see some good deals with China, though. That could be exactly what the SPY needs to get it up through like this big $595 to $600 resistance.
Yeah, whenever there are honestly any developments on this trade war, it moves markets. This weekend, like you were saying, Trump said it was his great honor to raise the tariffs on steel and aluminum from 25% to 50% starting this Wednesday. So we will see. I don't think China's going to like that too much, but it should definitely be an exciting week on that front. But Tom, we even have some nice earnings releases scheduled as well.
We actually do, and I know that the earnings season is dying down a little bit, but this week there's actually quite a few big reports here. I will say Campbell's Soup on Monday, a little bit underwhelming, right? But as we go throughout the week, Tuesday we have Dollar General, NIO, and CrowdStrike. Wednesday we have Dollar Tree, MongoDB, and then Thursday, which is going to be the big day of the week, Cracker Barrel reports, one of my favorite restaurants. No, I'm just joking, guys, but Broadcom, DocuSign, Lulu, definitely going to be on the radar. I think AVGO is going to be my personal favorite next week, being in that semiconductor industry, but I do think that DocuSign will be a very interesting report, given that they're more of a growth stock and they could have some pretty insane runs.
Yeah, definitely. Like, we certainly don't have an Nvidia reporting this week, but don't doubt this week's earnings lineup because there should be some good moves. So, good stuff there. And then, Tom, as we know from Friday, one stock that is going insane right now is Palantir. It is kissing its all-time high. It popped up by nearly 8% on Friday, and there is some crazy news here where essentially the Trump administration is doing this project with Palantir where essentially they're going to be collecting and centralizing data on all Americans. So data like your bank account numbers, your student debt, medical claims, any disabilities, and a bunch of other data is essentially all being collected together, and these contracts are supposedly worth hundreds of millions of dollars, and both Palantir and the White House are keeping the specifics of the project very secretive. Neither of them really commented on what they're actually doing, and as we know, if we look at Palantir stock, this company has been blowing up over the past few years, and not only just like them with their own commercial business, but also their involvement with the government. The Trump administration has expanded Palantir's work across the federal government a ton since he took office. They received over $113 million in federal government spending, and that is also not even including additional funds from existing contracts they have, as well as new contracts that they have with the Department of Homeland Security and the Pentagon, let alone their $795 million contract with the Department of Defense last week. So yeah, Palantir is crushing it. They are just, the government, the government can't help themselves but spend money with Palantir.
Yeah, it seems like every week there's a new Palantir headline with some new contract or some new deal that came out with them, and they're up 74% essentially since the beginning of 2025. So I got to give it to Palantir. One stock that has done very, very well in 2025 in the tech sector. Palantir has been coming back so well, and I will say I know that they dipped recently, and then they've been making this great recovery. And as I start to look at some of their price action just a little bit harder in the short term, their all-time high is right around 133.50. We can see it actually hit there just a couple weeks ago on May 14th. So I will be watching that for a potential breakout opportunity. I think that the main thing with Palantir in the short term is following this good upside momentum while it's here. Like we can see on the daily chart that they do get into periods of flatness and a lot of chop, but whenever they start to really run and they get their good moves going, they can have great multi-day continuations. And I do think that in the short term, holding this key 130 support will be pretty awesome for them. We can see that even in after hours on Friday, right as after hours ended, that 130 support was kind of coming back in play there. If we go over to the Bookmap, we can actually see that 130 was instrumental in Palantir's price action on Friday. Essentially, it touched 130 and ran just a little bit higher and then ended up rejecting back down intraday. So I'm definitely going to be watching that 130 area as support. And if we do break the all-time high around 133.50, 135 has to be next on the radar. I mean, that's definitely where the next stack of sellers is, with 271,000 shares stacked up there. So there's a couple levels to look for on Palantir if we do continue on this uptrend.
And as we know, Palantir is one of those stocks that has a lot of momentum. They are a crazy moving company, and there's certainly going to be a lot of opportunity with this news in multiple different senses. You know, you listed a bunch of great levels for short-term trades, but also, as a lot of our viewers who've been with us for some time know, we've been very early to Palantir, and the stock has done extremely well over the past few years, but I wouldn't be surprised if this company continued to grow more and more throughout the future. At the same time, the company in stock is up so much, so you have to keep that in mind. In a long-term sense, it is pretty high right now, which goes hand in hand with, yes, increased risk, but also their business is booming, so it kind of justifies part of the increase at least. But yeah, it should be very exciting to see what this company does throughout the long term.
Yeah, and I always like to compare some of these better companies, and I'm not going to say better companies, but we'll just look at some of the bigger names out there like Nvidia and Tesla on some of their massive runs, because I know some people on the way up were just their minds get blown at how some of these companies can really continue to run up year after year after year, but they do end up slowing down a little bit. And I think that that's really evident with Tesla's huge run up. In like 2020, 2021, 2022, Tesla went insane. But as we know, things did shift for them, and they did go through a period where they had to, pull back for maybe a couple of years there. I'm not saying that that's going to happen with Palantir right away. For now, let's enjoy this really nice uptrend, but it's just something to go back and look at. And, there's always a couple stocks out there that really steal the headlines, and Palantir is definitely one of them that's up there with these bigger names, I'd say.
No doubt. So, like, in a short-term sense, the more attention this news continues to get, the more opportunity there will likely be with the stock. So keep that in mind and keep a close eye on all the levels Tom listed. But besides that, Tom, let's jump right into some SPY levels and analysis for tomorrow. What are the key levels to keep on watch, and what are you seeing on the charts?
Looking at SPY last week on Tuesday from Friday, it actually gapped up last week, and I'm going to be watching that gap very closely as we move throughout this week. We can see that after it gapped on Tuesday there, it actually tested that lower level right around 584, and that's right where SPY ended up bouncing on Friday, so I'm definitely going to be watching this as a key level of support. I think that if we start to move under 584, there could be a great opportunity playing the move down towards the bottom of that gap to fill it down to around 580. That would be a really good 4-point move, and that's definitely something I'm going to be watching for as the week progresses. There are some good resistances on the SPY as well, very close to 590 to 591. I'm just going to call it a $1 range right there because we've seen so many bounces within that $1 range on the SPY, and if we can really rip above 591 where that high of day was Friday, I will be watching for maybe more of a breakout towards 594 to 595 again, which is where SPY got to at that high of last week. But overall, I think the main thing with SPY is really being mindful of these overhead resistances and mindful of a possible pullback because the market's been doing so well and we've been just in such a good bullish run that we can see pullbacks, and it will surprise people if you're not willing to adapt.
And don't forget about those important events that we have scheduled all week long. So keep that in mind. That will drive a lot of the price action and momentum. But besides that, let's jump right into some specific setups and predictions. And a stock that is close on my radar is FSLR, and it is to the upside. Last week, we had a $1.1 million big money trade with this one. And I like where it's at right now, where it's just around this 158 to 159 area. And if you look at recent support right around 152, you can risk, you could say, around $6 to $7 per share there, or you could even cut it quicker than that. And in a good sense, if the stock can bounce off of this area, and it's good to see that there's that recent big money play too to help support this bull thesis, I would not be surprised if the stock would be able to test that 180 level or even higher, depending on how this momentum develops. Essentially, we have a situation where you can risk $6 to $7 to make 21 to $22, and again, you can there's nothing wrong with getting even tighter with that stop as well. So either way, it's close on watch.
Yeah, that risk reward looks pretty awesome right here on this overall setup with FSLR. I'm definitely going to keep it on the radar. That short-term support at 150 is going to be huge to continue to watch for. As I go through my first setup, Mike, it's CoreWeave, and we talked about this one a lot last week, and it's been actually powering to the upside. But as we can see, it actually did start to break below a pretty good trend on Thursday, and then Friday, I actually think that the way it popped back up could make for some great confirmation back to the downside. So what I'm really watching for is this overhead resistance here around 114.50 to 115. If we do see CoreWeave start to reject off of that and move lower, I'll be watching for this 104 breakdown and a move towards $100. I think that you could play that little $4 move there and be pretty safe. I don't think that would be the largest move ever for CoreWeave, and I do think $100 is going to be a big support that could be a little tough to break below. But either way, I will be watching for the continuation to the downside. It's getting a little bit overextended, and I do like the way in which it's starting to break this overall higher low trend.
Nice. And CoreWeave is one of those stocks, like over the past few weeks, that really moves with momentum. And there's a lot of opportunity that comes with this one in both directions. So it'll definitely be on my radar as well. Another stock that is close on watch is TEM, and it is to the downside. I know we mentioned this one a handful of times last week, but we haven't seen that true breakout just yet. So basically, it had some bad news last week where they have a short report going on, and it's holding this like support right around $53 per share pretty well. If we can see that actually break, I think the risk reward playing into the downside would be great. But again, I want to see this level break. If it continues to hold support, it's going to be really hard to justify playing it down. But TEM is one of those stocks, kind of like CoreWeave in the sense that it has been like very momentum driven recently, which can offer some great like day trade opportunities. So either way, TEM is definitely on the bearish radar.
Yeah, following that short report, I'm definitely going to keep watching TEM to the downside as well. And I think that a lot of people are probably like, why do you guys keep mentioning it? It's not doing anything. Just be patient here. It's really straddling the support. And I think that the patience will pay off for the people or the traders that are willing to wait for this one and that have a good plan and are ready to attack once it does break down. So I'll keep it on the radar as well, Mike. With my next setup, I'm looking at NVIDIA for a possible downside move. I do not like the way that NVIDIA started selling off last week, especially on Friday. I know Thursday it started falling off after their earnings, and it wasn't too bad, but on Friday, it gave the entire earnings move back and even broke below the low from Wednesday there, right in after hours during that earnings report. So I'm going to keep watching this one to the downside. I think that this resistance that it's starting to confirm off of on Friday in after hours is going to be huge. If we end up seeing a good rip above 136 come Monday morning, I won't keep watching it to the downside. But if we do see this rejection and this resistance hold up, I'm going to keep watching NVIDIA down. And there is a gap to fill from last week as well, down to around 131. And I know NVIDIA kind of moves like the SPY, and SPY has a gap to fill down to there as well. And if NVIDIA starts falling, it'll really help fuel that downside move on the SPY. But either way, there's been a lot of bearishness following their earnings report, Mike. And it was a pretty good report. And I know that that makes people upset, but that's earnings for you.
Yeah, and it's like the same pattern that we saw with the previous earnings report and the one before that, and it's just like it keeps repeating where the stock tries to move up on the initial earnings move, but it keeps reversing, and it looks like we're in that same pattern right now. And throughout the previous earnings releases, like it would continue down for like honestly multiple days, in some cases multiple weeks at a time. And as we know, Nvidia is a company that tends to have some pretty good moves as well, so definitely keep it on the radar, and I certainly will as well with you, Tom. But besides that, we are all clear for today's momentum plays. And with the first one, we have Archer Aviation, ACHR, to the downside.
Yeah, Archer's been pretty rough in the short term. If they end up re-breaking below $10 even, then keep watching them down.
All right, with the next one, we have Robinhood, ticker symbol HOOD, to the upside.
Yeah, Robinhood actually did pretty good on Friday, and they're right around a key resistance. So if they're able to break 66.50, watch them to the upside.
Awesome. And then with the last one, we have Spotify, ticker symbol SPOT, to the upside.
I really love this resistance here on Spotify, just above 670. So if it can break above 671, then watch it up as well.
Awesome. So keep these stocks close on the radar, but as always, you have to cut losses if the setup does not break through the levels. So like, for example, let's say we look at Spotify, and let's say we know it has momentum here, and we know that it has resistance overhead. It can break through that, but of course, there will be some times where it ends up failing. It is more important to keep the losses small in those situations, because if you don't keep the losses small, it makes it a lot harder for the times where it does win to outweigh those losers. This is the same for momentum plays, is literally every other type of trading. You need to have the winners bigger than the losers. There's a bunch of ways to do it. The easiest way is to keep your losers small. But with all that being said, Tom, let's jump right into today's $1 million big money trade. And we are looking at ticker symbol AZN. On Friday, the trader here bought the $72.50 strike call options that expire on July 18th of 2025. This setup is pretty interesting where on Friday, the stock had a good day, nothing like plus 8% like Palantir, but for a company like AstraZeneca, you could say nearly 3% move is good. Its price action was very strong as well, and we can see that these call options are at the money. There is some time to them, just under 50 days to expiration, which, is a fair amount of time, but it's also a relatively short expiration in the sense where the trader here is expecting this move pretty soon. A $1 million trade is definitely nothing to ignore either, and there was even a lot of news driving this as well, so very interesting setup.
This is a huge resistance that's starting to break on AZN here. The stock had actually rejected here and got stuck just a month ago at the beginning of May. So I'm definitely going to be very mindful of this area. And I think that the trader here would be looking for more of a breakout up above this bigger resistance and maybe even like a test of these recent highs up around like $76 to $78, somewhere like up around that range. I would not be surprised if it got there. Whenever we look at AZN, it's trended pretty well in the past whenever it does start to get some good action going and, coming off of news and being a $1 million big money play. And I do like the strike as well, being 72.50, which is in the money. If this strike was up around 78 or something like that, it would definitely worry me a lot more. But with it being right around the money and now in the money, I'm definitely a little bit more confident here. And I do love that short-term resistance that's starting to break. That could be showing a lot of strength if we continue to show like a powerful move through here.
There we go, and we shall see. But if you guys are new to the channel, definitely consider obliterating that subscribe button so you can get our videos recommended to you more often. Every single day we cover multi-million-dollar big money trades just like this one, plus the most important news, information, chart setups, and data that you'd never otherwise see. We also cover setups every single day as well, so if you like our videos, definitely subscribe and you will hear from us more often. But we also have to give a giant shout out to today's member of the day, M. Gross in the StockedUp trading floor, who had a great post on Friday. He had some great gains with some Costco call options. And what I like more than anything else was the last sentence that he posted, where he's basically saying, I'm staying consistent and focused, which is exactly what's necessary, especially in a market like this one where there's a lot of big opportunities coming up. So huge shout out to you, M. Gross. Keep on rolling, and it is awesome to see gains like that. But besides that, guys, we're definitely set for a very exciting week. Make sure to tune into the videos as the week goes on. We're going to have a lot to cover, especially with these economic events, plus this potential Trump-Xi trade war call. That could definitely be pretty exciting. But besides that, thank you all so much for watching. If you have not tried out Bookmap already, now's a great time to try it out. As Tom showed, there's a lot of sellers stacked overhead with Palantir. Bookmap is basically X-ray vision for the stock market. It works for all stocks, and you can see key support and resistance levels and quite literally exactly where major buy and sell orders are stacked up. StockedUp viewers do save. Just make sure to use that link down below. But besides that, thank you so much for watching, and let's crush it in the market this week.